Hi everybody, welcome to the Baguette Investor channel for a new video. Sorry for me not having a lot of energy today. I have COVID, so I'm recovering little by little, but I'm still doing this despite being a little sick. So I hope you don't mind me being a little bit downhill, if I would say. Let's start the weekly review by my weekly performance. Nothing really important. My total performance since the beginning of the year is minus 600 euros, so nothing really big. 2.5% negative performance. The massive leg, when I mean massive, the small leg down here is due to the euro dollar exchange rate. I didn't make any bad trade. It's just that I hold a lot of US dollars, and when US dollar goes down, my purchasing power in euro goes down. Makes sense. But we're going to take a look at the longer term, because what matters is not really the short-term moves. It's really when there are the big trends that come. For me as a trend follower and trying to catch the big trends, I make money over the big trend. I can stay like 3 months making zero per month, and then 1 week I'm going to make $10,000 because of 1 or 2 trades that will make me win big. So this is the thing I must focus on. First thing, sorry for me yawning. I'm just so tired right now. We're gonna do this by starting with inflation becoming mainstream. That's the main thing I want to talk about in this video. Is inflation really becoming mainstream? We saw this last year, inflation becoming a real thing. And what's driving inflation? It was shipping prices, huge demand, but the main thing is energy prices. Energy and commodity prices are just going crazy. They went crazy last year and they keep moving up and up and up. So we're going to study this a little bit. You see, this is the DBC ETF, which is the commodity index from Invesco. You could look at the GSCI, it's the same thing. It tells you the same story. You can see that since 2008, from 2000 to 2008, you had a massive run-up for commodity prices. I don't know if you remember the commodity bull run, but you had every single commodity that went up during this period of time. Right now, we are seeing the same thing, but between these two periods, you had a massive deflation period. You can see that from 2008 to 2020, you had a deflation period. You had prices of commodities all going down. It was energy, metals, industrial commodities, agricultural commodities, everything was going down. And you can see that now we broke up this support level, this resistance support level right there. And I paid really attention to this. You can see that right now we are breaking this level for the commodity index. And we are going for this level here, I think, of the previous. You could see this one right there. The first stop might be here. But yeah, I wouldn't be surprised if we reach the 25 level in this ETF. So yeah, if you look at the energy index, I had this thing. If we break this resistance here, this is going to get inflation is going to get dirty, and I think it's what's happening right now. Maybe we are starting the beginning of a massive commodity bull market for oil, gas, coal, and all these kind of stuff. Look at agricultural commodities. You can see they were in a deflation period, and now we're seeing an inflation period. Look at what's happening. This is inflation, and you can see that it shows no sign of going down. Same thing for base metals. Look at this. You had the same support resistance. Now we cleared it, and we're now moving up and up and up. So yeah, no sign of deflation right there. Gold is also setting up to break out. So gold is really good indicator of the commodities bull market. You can see that in the previous inflation period, it worked really well. as a hedge against inflation. So I'm really keeping my alerts on gold, and buy all these stocks moving up, by all these commodity prices moving up, I mean, that means that central banks have to do something about it. So the Federal Reserve said that they are going to act on the inflation. If you look at the US 1 year, you can see that it's already gone up quite a bit. But we are now only seeing the central bank of Europe that's started to talk about inflation, and started to tell that maybe they are going to act on inflation. You can see the German 10-year spiked a little, and the Bund, which is the German 10-year, but not the yield, the actual bond value, you can see that it starts to have a correction. So maybe we are going to see a correction movement in the bond sector, because that's what people are really trying to anticipate, is the bond yields starting to go up. That would mean inflation becoming more and more mainstream, and inflation is just becoming more and more mainstream. What's happening with inflation is that you have the energy prices taking all the prices up, and that means the companies that will profit from this inflation are clearly not the growth stocks. So growth stocks are just being completely crushed. The biggest growth stocks are not completely destroyed. Like, you have the biggest companies here. You have Apple, which is doing pretty fine. You have Microsoft, which is hit hard. You have Google doing fine. You have Amazon doing very strange. Tesla on the support. Meta doing bad. Nvidia doing bad. Adobe doing bad. Netflix doing bad. So you have all these stocks that really stopped going up. And now, Salesforce is now down 30%. Oracle down 20%. Accenture down 17%. So yeah, most of these stocks are actually down quite a bit. But you have other kind of stocks that I'm watching that are setting up for massive trends. These stocks are energy stocks. This one, for example, Freehold Royalties, already broke out. You can see that you have nice trend with low volatility, beautiful trend, and you can see that it sets up a cup and handle pattern, and that cup and handle breaks out. I'm gonna display the volume to see a little bit how the volume behaved on these stocks. This one, Sentinel Resource Development, listed on the Nasdaq. Also a oil stock that is breaking out of a beautiful triangle pattern. Beautiful stock. You have Matador Resources Company. I have this one, Weatherford International PLC. This is one of my favorite one. It just looks very good, and the trend is absolutely crazy. Since November 2020, the stock is up 863%. So that's really the kind of stock that you want to buy when it breaks out. As you can see that every time there is an influx of capital on this stock, the stock goes completely crazy, and it does not wait to go up. So imagine that we see a breakout again, and it behaves just like it behaved in the past, and we see a magnificent spike like this. That would be very good. And you can see that you have the earnings very soon. We have GWO, which is a financial stock from Canada. That's a little bit too late to buy, but it's just a very good representation to show you how things are changing. With rates rising and inflation becoming mainstream, the two big players from this inflation are energy stocks that profit from the rising energy prices, and financial stocks that profit from the rising of interest rates that allows them to make more money. And you can see that this financial institution, Great West Lifeco Incorporation, which is a holding company, engages in the provision of life insurance, health insurance, and retirement services. You can see that it's printing a beautiful breakout pattern. So this is the kind of stock I want to look at. Another energy stock, Crew Energy. Look at this. We have secular choppy market. In the last moments, you have a downtrend that that tells you just don't look at this stock. And now we're seeing the first best place to enter on this stock was here in June, right there. If you had the possibility to enter here, was crazy, but we're now seeing countless amount of patterns. You can see that this stock is in a massive downtrend, makes a correction, stabilize, and then another one, correction, stabilizes, and then starts again. So maybe we're seeing the same thing here. AMR, I believe it's coal. Yep, I'm gonna print the log scale. You can see that also pretty cool pattern, not the best, but pretty cool. And Arch Resources, which is very nice all-time high breakout for coal stock. So yeah, there are many value-related stocks that are interesting during those times. You can see the volume picking up on many of these stocks. Really, everybody's talking about them right now. The market is very choppy, so you need to be very cautious. At the moment, I do not own much of them. I own this one, Novista Energy, trying something on this one. Wish me luck. Hope it's going to be great. Bought this a little late. It's a little bad, but yeah, I'm trying something at least. I'm also long on carbon contracts, but my trading view just does not want me to display the symbol. I'm long on agricultural commodities too, and I still own these lithium stock, CXO and FL. I'm also long on corn, which is pretty good investment right now. I'm really keeping an eye on agricultural commodities. So my goal is really look at the energy stocks. That's what I'm telling you guys. Keep an eye on it. That's it. I'm gonna go back to sleep, I think, and make the thumbnail and then go back to sleep. See you in the next video. Goodbye.